We've been seeing somewhat of a disconnect, as you just heard, between the soft and hard economic data lately. Consumer confidence yesterday, 12-year low. Today, J.P. Morgan kind of said that anecdotally its spending growth is decelerating due to weakness in airlines and lodging. At the same time, orders for durable goods rose nicely in February for the second straight month. So what's the real story? Let's ask a couple of experts. Diane Swonk is chief economist at KPMG, and CNBC senior economics reporter Steve Leisman joins us as well. Welcome to you both. Diane, do you see a hard-soft data divide?
Well, yes, we are seeing that, and part of it is because we literally are seeing firms front-run tariffs, everything from the durable goods orders to imports coming into the country, even excluding gold bullion, which has soared, are still extremely strong in anticipation of tariffs. That will be a drag on growth in the first quarter. We've also seen consumer spending slow. It was really a bang-out, very strong December that lifted the fourth quarter to a 4.2% pace on consumer spending. We're expecting less than half that in the first quarter, and I think that's very important as well, is that you've got sort of this shifting going on that it adds up in our book to about 1% growth. The GDP Now index from the Atlanta Fed is in the negative, but it doesn't adjust for that gold bullion imports, which tend to make it look even weaker, and that is not included in GDP.
I think they just said, Diane, that if you now adjust for gold, that their GDP measure is running positive 0.2%. So yippee. But I guess
right.
the larger point I'm curious to hear from you about is that you're kind of in the stagflationary camp. Am I putting it too strongly?
No, it's a mild bout of stagflation is what we have. And, you know, we have the overall fourth quarter to fourth quarter growing about 1.1% for 2025 with the unemployment rate creeping up. And the only reason the unemployment rate doesn't go up more rapidly is because, of course, we lose a lot of immigration. And that's part of the policy decisions to be made as well. But it is a move up in unemployment and a move up in inflation. And then it tapers off as we get into the latter part of the year and you start to see some of the mitigation efforts underway. We've been working really closely with our trade and customs people and all our clients, trying to deal with what is coming their way, how do they hedge, how do they deal with the tariffs, and look for clawbacks and where they can get some relief on the tariff front.
I like your KPMG tracker, too, of kind of projects across the state.